So look, I'm going to show you something really interesting. How price action works. Let me teach you. So when you trade the 1 minute on leverage, you're trading how price action falls through price action. Now watch this. This is going to be really interesting. But I backed this for years to figure it out. So look, you fall. First thing you do is you break the moving averages. Then you try to retest usually the 21. Look, you don't get above the 21. Then you fall. Then you retest the 21 again. You don't get above it. Then what do you retest? The red line, the 50. So look, the white line, then you retest the 50, right? You break that. Now you retest the 200. You see that? Now the 21 goes below all price action, and now you're still trying to get above the 200. Once you hit the 21. Once you break above the 21, you go for the 50. Once you get above the 50, you go for the 100. See? You got rejected. You broke up, got rejected. You got rejected by the one. Once you break the 50, you go for the 80. And look how you got rejected by the 80 right there. Then you came up and you got rejected. Look, I'm going to prove this to you. You come up, you get rejected by the 21. You break through that. You come up or you get rejected by the 50. Come down. You come up and you have this high volume break. You bounce off the 50. You get rejected by the 80. You bounce back off the 50. You get rejected by the 100. You come down to the 50 again. You fly up and you start to challenge the 200 now. See, look, you challenge the 50. You challenge the 80. You challenge the 100. Then you challenge the 200. That's when the trade ends. So you get into the trade when you're below, and as price action moves through them, once you're at the 200, you're out. That's how you leverage trade in the 1 minute. Leverage trading through price action with the moving averages. So once I'm away from the 21 and I see the bullish divergence, so I would always look for the bullish div, the strong bullish div. And again, I used to do a boot camp 1 minute trading on leverage, but I don't do it anymore. I felt it was bad for the beginners, and I said they can learn from me spot, and after 2 to 3 years, if they want to get into leverage trading, they can do that. You know, so I moved away from teaching people how to trade leverage, all right? But you can use the 1 minute to learn so many different things. So look, the same thing here. Look, we hit the 21, then we challenge the 50, the 100. But once you get above the 200, huge move. Then you usually challenge the 200 again, and then you're gone. So you can see how like price action actually has been moving through. Look at this. 1 minute actually is telling you something. That was a pretty big spike right now that we just got back above 23K. And didn't I just say I would play this the same way as if it was ready to go again? I've been doing this for a long time. I said I would just keep trading this the same way, and look what happened. It kept going. That took me years to figure out. You won't find another channel that's able to make a flip for you this fast. Tell you that it was likely we're going to continue back to the measured move. Why? Because I'm a stochastics trader, and I put my trust in them. And when I saw them moving up to the upside, I've trusted them so many times in my life, I had to trust them again. Bam, a short squeeze. Short squeeze orange juice. Every single day now, it's a short squeeze. Every single day. It's not the buyers pushing the price up. It's the liquidations of the shorts and then the long. So there's really no one buying and selling right now. We're kind of stuck in limbo. It's the leverage traders moving price. Do you get it? It's the only reason we're moving recently. Because people are leverage trading and they're getting rocked and wrecked. Thank God for the liquidations. They're helping us trade altcoins. But they're not enough. We need more volume than this. And so this is why we've been stagnant. Trading in the summer will be the hardest thing you've ever done. All the rich people take the summer off. They take it easy. So you should take it easy. And don't go too hard, huh? Don't go too hard when there's lack of liquidity in the market. All right, just something to think about.